Welcome back to the channel, Crypto Trend Trader, the quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, I was getting ready to basically make a video explaining a couple things about like the alt cycle and exactly what I expect to happen here and how I expect this trend to play out and everything. And then I realized I already made the video. I made it on August 14th, so a couple days ago. But I know you don't want to go back and watch a 41-minute video. So what I'm going to do is I'm going to just show you the exact excerpts of the video that explains what I'm talking about, and then we can see how it played out, and then I can hit you with like the actual TA of what's going to happen like in the future that's even more relevant now that we've seen like the price action develop. So let's go ahead and start with it. We're just not sure exactly what we need to look at right now, and that's okay. You take enough trades when you do have confluence and you do have enough things lining up, and those are going to be your best trades, and then you can take a risky trade here and there, or one when you get a feeling, or you have a couple things lining up and not everything. You know, it allows you to basically be a little more risky. But if you're just waiting and you're not taking like the trades, or you're taking bad trades, or you're getting bad entries, you know, you're less likely to take that trade and then get the real good one to happen because you're not taking as many trades. I would rather take 20 trades and break even on 19 of them and then get the one massive move than take 20 trades and be profitable on 15 of them, but still make less money than if we just got one good one. And so really what it comes down to is when you're looking for these trades, you're basically looking for that one massive move, that one massive win. And all you're trying to do in the meantime is just mitigate your risk so you don't take that massive risk. And then everything else in between is just gravy. You're getting little moves up, little moves down, you're making a little here, a little there, breaking even, getting into trades, getting into positions, and then you're waiting for the big moves to happen. And it looks to me like we're getting ready to top out. And I know people don't want to hear it, and nobody likes to call the top and this, that, and the other. Well, I've seen these markets and I've looked at these markets enough to know when it looks like, it's getting exhausted. And I know everybody's super bullish on the stock market and they're printing all this money and this, that, and the other. Well, be careful, okay? Because right when everybody gets absolute bullish, just like they did last year when the stock market crashed, and everybody thought I was crazy and they were calling me stupid and telling me I didn't know what I was talking about. And sure enough, then all of a sudden, everything goes from perfect to, the coronavirus, and then it's dumping. And we're selling off to, massive lows and 50% drops. So be very careful in these areas. And now let's look at what's going on with this bad boy. So we're crossing to the upside. We get that move. That's an awesome continuation move. It's the daily. Comes all the way up here. Shows exhaustion. We get that knife stab. We're in the bearish, distribution zone. We're basically like saying like people are selling off right now. Potentially could get continuation, but we're in the area where we're essentially getting exhausted. We get the cross down here, the blue cross. Okay, cross is below, and then we attempt to cross it back over. We re-enter the bearish accumulation zone or distribution zone, and then what happens? We find resistance. The blue finds resistance on the purple and fails to get the cross right here. If that would have crossed over, we would have got the blue buy and continuation to the upside. But instead, it gets rejected and comes down. So now you have the purple is coming down. That's our longer time frame. You have the blue is coming down. That's our shorter time frame. You have the knife is coming down. So all three of these are casually drifting down on the daily. And yet what is happening? Price is casually drifting to the upside. And once again, that's revergence. So we need to be very careful again with that, because essentially when the sell-off does happen, it's going to be very, very violent. And that's our daily. And now finally let's switch over to the weekly rather, I'm sorry. And you'll notice here on spot markets, we did take out that high on the weekly. So we have our high, we have our low, we have our lower high, we have our higher low. And now what are we at now? If this sells off right now and comes back down, we already have a higher high on spot markets. It's higher than this one. That's good. And now if we come down here and we can, basically make it to the 200 exponential or 200 simple, we're going to put in a higher low, and that's going to look bullish over time. And I think that may be like the actual, move that we can take like a positional trade off of for like a long-term trending trade to the upside. And again, if we make it down here as far as the 89, it's way down here at 8100, but that's oftentimes going to be our target, is either the 50 right here at 8764 or the 89 right here at 8077, and that's going to line up with the parabolic SAR. And what happens when we get to the parabolic SAR? We come down there, we touch it, we flip it, and we dump. So if we come down here, we touch this, we're going to flip it, and then we're going to dump to 200, and that is going to be our long-term trending trade to the upside. Now what I do like to see here on the weekly is we were able to get back above the red line, the red slope line. And if we spend enough time up here and we get high enough up, we're going to violently flip this back over, and we're going to get the blue continuation. Now the best place to take the blue is from below the heart line, below the mid zone, okay? And that's when you're going to get your long trending trades. And then when you start seeing these histograms, and you get not one, but two histograms in a row, that's telling you the trend is getting exhausted. You almost always get some kind of bounce, attempt to come up, put in a lower high, and then we'll sell off. So now what's happening here? We got above it. We're starting to turn this back over. We're starting to roll it back over to the upside and potentially going to turn it blue again. But what is happening? Okay, we're getting the green right now. But if this begins to top back off, it's going to start looking exactly like what previously happened right here. So we need to be very careful with that. But it is possible that we're going to get that continuation. And again, we're looking at the weekly. So we could consolidate for months right here. We could sell back off, put in that higher low, consolidate, and then finally get that move to the upside. And it's going to confirm what we saw in the weekly, but it just takes a long time to play out sometimes. And then here we are, once again, have the distribution zone, knife stabs all the way up to the top, telling us that we're expecting the next knife stab to top out, and that's the end of the trend. So let's look how that looks on the chart. So we basically get the knife stab up here, that's the break, consolidation, and then when we come up again, This is where the knife starts getting exhausted, and then after that we're getting tired, but it's continuing, and then we finally get the hard sell. It attempts one more time to get up here and take out the parabolic SAR, and then that's it. Consolidation, sell off. We take it out, everybody gets extremely bullish, and then everything happens in the market. It crashes down here, and this actually preceded the stock market. It happened beforehand. And then finally, we get that bounce back up here. It gets marched back up here. This is like basically like full-on marching action. We get this indecision right here, a big wick on either side, and then we get a massive rejection, and it looks extremely bearish. Two massive wicks, and then boom, we get the burst of the upside. Consolidate inside the moving averages, and then we finally get on top of them, flipping back over. So at this point in time, it looks bullish. It looks like bullish continuation. But again, I've seen it all before. So we get the blue above here, we get the sell. We get the buy, we come down here, we find support, barely. We were about to get a cross right here, and we found support, barely. Now, if we continue to move up right now, we're going to flip this back over red, and we're going to enter back into the bearish distribution zone. And again, if we start seeing, more than one histogram red to the downside start selling off, I would expect us to come down. And when we come down, what we want to see is, we want to see the histogram come down, and we want to see it find support on this. And when it does, when we do get that move finally, then we can expect a continuation, and then we can flip that back over blue, and then we can get our long trending trade. But right now, we don't have that. We don't have that. This is going to be the best, on a weekly time frame. This is going to be your best indicator. We flip this back over to blue, and then what happens? Everybody else sees it. All right? Everybody else sees it right afterwards. And then boom, get right back up, push right back up to resistance, consolidate, continuation to the upside. Massive move. Two reds in a row, sell off, you're done. Sell back below it. All right? So when we flip this back over blue,
that's what's about to happen right now.
Trending trade, a long weekly trending trade. And the weekly trending trade, when that flips over, that's going to last 4 months, and that's going to signal to us a bull run. Now, is it possible that we get the same situation like this, a bull run where we put in another lower high? Yeah, of course. But we're going to pay attention to that because we're very close. We're above it right now. We sell all the way back off, consolidate above it, and then get continuation and flip that bad boy back over blue, and that's our massive bull run. And there's no reason why that can't happen sometime in the very near future, especially as all these currencies are getting devalued. But again, that's fundamentals. That's not technicals. And now here we found support on the blue, on the purple, and the blue is continuing to the upside. And as soon as we get above this blue line right here, we're going to re-enter into the bearish distribution zone. And the most reliable signal is once you're in the bearish distribution zone, and then you get the hard sell as you exit it. When we're in the bullish accumulation zone, we get the little flash of it, but we get a move back above it, and then we get the little flash, and then we get the hard buy. And again, your most reliable indicator is when you get the accumulation, and then the hard buy, or the distribution, and then the hard sell. So what could happen right here? We're going to come back up, we're going to get back in the distribution zone, we're going to turn this back red, and then eventually we're going to get that hard sell. And that's when everybody's going to get wrecked, and we have to be very careful, because all we have to do now is just not get wrecked and hold out for that good move. We get in that continuation, long trade to the upside, and that's it. We can relax. We don't have to overtrade anymore. We don't have to scalp. We can just sit back, make money, wait for the pullbacks, and take profits. So we're going to be very careful in these areas. We know that this trend is potentially topping out. We know traditional markets are potentially topping out, and that's okay. There's nothing wrong with that. But as long as we know it and we're looking out for it and we're being careful. Now let's look at Ethereum really quick. Everybody's talking about how bullish Ethereum is. This is our daily chart on Ethereum. Where does Ethereum look like it's at right now? It looks like it's basically right above, at this resistance right here. Resistance, sell off. Resistance, sell off. And now what is that? It's an ascending triangle. Lower low, or higher low, I'm sorry, same high. And then finally, boom, burst, and we get the move to the upside based on the actual consolidation pattern. Flagpole move to the upside, measure move. Come back down. Where did this get up to? 1,300. Where is Ethereum now? 400. So we are still 300%. We need to get a move of 300% on Ethereum just to challenge the previous all-time high. Meanwhile, almost every market right now is making all-time highs. Traditional market, all-time highs. Gold, all-time highs. Even the index ones, which are loaded up with absolute junk, are making all-time highs right now. And yet somehow, Bitcoin and Ethereum and all these top market cap coins are not making all-time high. And if that doesn't scare you, I don't know what does. But here we are. We're basically at the top of the range. This is where I would expect us to top out and sell off. This was our support flip. It's a support resistance flip. It's resistance. It's resistance. It's resistance. Boom, we bust above it. It comes back. It's support right here, and then continuation. And then we come down to it, and it's support again. Back. Go back up here. Lower high. Come back down. Support. Fail and dump. Come back up. And now we got a high, and then a low, and then a lower high, and then a lower low. And now here we got another lower high, and then we put in a higher low, and that starts looking bullish. And then we come up in here, and we put in another lower high, and then we dump back down to a lower low than this previous one. But now, this looks like the macro, and that is essentially our low, and then that's our higher low. So the whole time we thought this is our higher low, but then we sell back off, but we still put in a higher low, and that's okay, that's bullish. And now here we're putting in, the way you can look at this is, this was our low, that's a high, and then we came down here, and we put in, essentially, a higher low, and then we came up here, and we put in a higher high. So on the micro, that looks like we're actually in an uptrend right now. But in all reality, if if you zoom out, we're very clearly in a downtrend still. And all this is essentially a bullish retracement of a bearish trend. So essentially, we're just selling off for so long, it finally breaks to the upside, but it breaks to the upside and puts in another lower high. So we have to be very careful right here. Very careful right here, because this is exactly where you get trapped in positions. At the very top of the range and a violent sell-off. So
This is where you end up holding bags from.
We are our distribution zone. We did
Get bullish at the top.
Exit the distribution zone, and that's why this didn't look bullish, or this didn't look bearish to me. Price action on Ethereum, it would sell off and then it would immediately get bought back up, even more bullish than Bitcoin. And then Bitcoin is over here putting in another lower high, and then Ethereum's breaking out to the upside and putting in a higher high. So again, Ethereum is leading to the upside over Bitcoin, but the second Bitcoin decides it's done, Ethereum's going right where it goes, right back down. And if Bitcoin decides it's going to the upside, Ethereum's going to the upside even more violently. And that's what's great about altcoins, but it's also terrible about altcoins is they can do whatever they want. And then the second daddy Bitcoin says, bro, we're going up. You're going up too. And if he says we're going down too. So now here we are, same spot, back in the bearish distribution zone. We're attempting to cross this back to the upside. If we can cross the blue above, we're going to get that buy. But if we don't, we're going to get a rejection right here, and we're in the bearish distribution zone, and we're going to get the hard sell just like this. And then that is going to give us that continuation move that we actually expect, because we would be exiting the bearish distribution zone. Here, we get the hard sell, but we don't exit the bearish distribution zone. And that is what makes the reliable signal. Here we get the hard sell, and we exit the bearish distribution zone. Here we get the hard sell, but we don't ever make it to the distribution zone. Here we get the hard sell, but we don't ever make it to the distribution zone. Here, we get the distribution zone, we get the hard sell, but we do not exit. So the number one thing that we're looking for is all those things to line up. We're looking for the bearish distribution zone, we're looking for the hard sell, and then we're looking to exit the distribution zone. So that's what we're going to pay attention to. And again, this is on the daily, so it's a long enough time frame that this doesn't just have to play out today. It can play out anytime from on average, I like to multiply the time frame that I'm looking at by between 4 and 12. And that's my average trade for that time frame. So theoretically, if you're on a daily and you're looking for a swing trade or something like that, or a decent little positional trade for something, short term, you're expecting that trade on a daily to last between 4 and 12 days on average, just roughly. That's what I usually look at. And then on the event that we do get that position, then you're going to look for the opposite. That's in the direction of the trend. So if we start selling off, you're going to look for it on the shorter end. So you're looking for a 4-day, bearish, basically like a bearish retracement followed by continuation. But in this case, we're potentially dropping out the whole trend, and we need to be very careful. So, like I said, we're expecting this range to hold right up until it doesn't. It's only going to break one time, but when it does, it's going to be violent. And I'm just in a position right now where I just realistically think that we have too much potential risk to the downside in traditional markets, in hard assets, in everything. And there's too much just indecision, and there's too much just uncertainty with the economy and with the CV and all this stuff going on right now. The only reason people are getting bullish is because the price action has been going up. And that's not always the best thing to look at, because that's creating a divergence between reality and the actual charts. So if you have essentially, the economy, and then you have Wall Street and the stock markets, essentially the economy is really what's going on. And then the stock markets are, speculation as to what's going to happen in the future. So if the real economy is still terrible, and we're not producing anything, and, we're not recovering, and things are getting worse still, they're not getting better, they're getting worse, but they're getting less worse. They're getting worse, but at a slower speed. So that's technically good, because we're starting to roll over the downtrend and then potentially going to put in like a bottom and then start moving to the upside. But that does not mean we're there yet. So we need to be very careful, because now we have a divergence. We have had a divergence for quite some time between reality and speculation, between, the actual economy, the world economy, and also the price of goods. And what that tells you is speculation and everything. When you see these assets like gold and stuff like that making all-time highs to the currency, it does not mean that gold all of a sudden is worth more. It means it's worth more money. And the reason gold is worth more money is because we're devaluing currency. And the reason that we're devaluing currency is to try to stimulate the economy and get money moving. But the problem is the velocity of money is so slow right now, it's almost stopped. People are afraid to spend that money. They're literally putting it away and only using it on what they have to. And a lot of those people are not using it to do things they should be doing, like, paying rent, paying down bills, paying credit cards. And that is absolutely horrible for velocity of money. So we have to be very careful now. I think we have basically a global economic collapse coming. We have so many things telling us that we need to be careful right now, and that the risk is way too high to the downside. Fundamentally, yes, it looks like, when you print a bunch of money that we should get moves to the upside, but when the trade gets too crowded and everybody gets on the one side of that trade, what always happens? It goes in the opposite direction. And why does it do that? Because the market is always going to go against the average person or against the majority, because that's how the market makes money. The market is always going to counter-trend trade the majority. And that's what we need to pay attention to, because that's what this is all about. It's all about trending trades. And right now, the trend looks like it may be exhausted. That doesn't mean we're not going to make it back up here. Doesn't mean we're not going to put in a new high. Doesn't mean we're not going to get continuation. But what it does mean to me is, it means we're closer to the top than we are to the bottom. And that is the worst place to be. I would much rather be closer to the bottom than top. I would much rather have a 50% chance at a coin flip than have a 25% chance at a coin flip going in my favor. And right now, I don't think it's a 25% chance. I think it's a very small chance that we're going to continue to the upside compared to the likelihood that we're going to get a retracement or a violent dump to the downside. Pay very, very close attention to the TJD TDMACD, because that right now is the number one thing that I'm paying attention to. We have divergences on multiple time frames. We have markets not lining up with each other. We have, the economy not lining up with the speculation. We have so many things and so many, inconsistencies that we need to be very careful. So is it possible we come up here and we put in the shoulder and then the head and then another shoulder and then we sell off and get the measure move? Yep. And it's going to be the same measure move. The difference is it's just going to break from slightly higher because we're in ascending support trend line. So.
All right, so that's the basics of it. And essentially, what I was getting at right here is that we're on this weekly, and exactly what I was saying is happening now. Look, we're in this downtrend, it cross over, we sell off finally, we start coming back up. I'm on the weekly time frame on Bitcoin right now. All right, we get the histogram back up above it, and we start to drag this moving average back up. Now, it's still a red slope, but price is going up. But if we stay above it long enough, we're going to turn this back over blue. And then we flip that back over blue is when we're going to get that continuation to the upside. But now here we are, we're at the top of the range, and what I say, we're going to exit the bearish control zone right here in red. We're going to exit that, we're going to come down, and then we're going to find support on the purple, and then we're going to move back up again. And then when we move back up, we're going to get one more time back into the bearish control zone, the red, and then after we flip that over, we are going to get the hard sell, and that's the most reliable signal in crypto. And what happens at the top of these trends? Exactly what happens is Bitcoin leads to the upside. Okay, then Bitcoin consolidates. People take that money after they've already made profits and they look where can they put it to make profits on something else that hasn't broken out yet. So then you get like whatever hasn't moved yet, like Litecoin and Bitcoin Cash and all these like medium caps and everything. And then people ride them up and they make their gains. And then they do the same thing. That starts to consolidate. And then all of a sudden that money turns and it goes into small caps and it goes into your little guys. And then it goes into your micro caps. And literally yesterday in the group, we were closing out trades that were up over 300% in 2 days. We were closing out trades that were up 50%, 75%. And I'm not talking about with leverage. I'm talking about altcoin like micro caps that were up over 300% in a couple of days. Okay. I mean, not to mention what like Link and Tezos and stuff have been doing that are actually like confirmed, bull market, blue sky breakout. I'm talking about like other ones like little guys, you know what I mean? Like Orchid we closed out was like up 300%. Like, I mean, it's just all these junk coins, Decentraland, like stuff that people haven't even heard of. They don't even know what it is. They're literally just looking at the chart for the patterns that already played out and they're saying this one's got the same pattern, it hasn't broke out yet. So then all of a sudden that money pumps into it. And it's the same as a game of musical chairs. Like Bitcoin's moving at the beginning and everybody's playing and there's 20 chairs. And then the music keeps going, and every time one of the chairs goes away and there's just a couple less people in the market, there's a little less money in the market, but the price is still going up because everything is pumping. But people are starting to get a little skeptical now. And then they start moving away from these coins, and then all of a sudden, like you finally get to the top, and all of a sudden these little altcoins are like all just like up hundreds of percents or whatever, and then people just dump them. You dump the altcoins, which is exactly what I did. And then somebody ends up holding my bag. I sold at like, it was like 93 cents or something like that. And it immediately dumped down to like 45 or 50 cents. Like as I dumped, it went down 50%. I mean, lost half of its value, but it had gone up 300%. So I bought again and bounced back up. And then eventually it just starts, dead cat bouncing. It starts just less of a bounce, less of a bounce, less of a bounce, and then finally people just exit out of the position. People realize they're not going to be able to get out of that little like micro cap coin. They're stuck with either a bag or a loss, and you have to make that decision because it's going to happen. And then where does that money go? It finally comes back into Bitcoin, and then it breaks Bitcoin out to the upside. It breaks out of the range that it's been stuck in. Okay, and that's exactly what's been going on. We break out of this range we've been stuck in. And you remember we were talking about that head and shoulders. Well, here it is. We got that head and shoulders. Remember we were talking about breaking out of the range and then leaving a wick behind. Well, here it is. Look, we had the Adam and Eve. It was forming out. We came down here. We said this is going to hold until it doesn't. It's going to break one time. But until it breaks, we're counting it as support. And all these wicks look bullish. So we bounce. We finally get this move up. So then we put this trade setup in the group. We had one to the upside and one to the downside. We took the trade setup to the upside. It obviously came down, almost wicked us out of that trade. Came down, looked like we were not going to get back up and put in that shoulder. And then what happens? Consolidate, consolidate, consolidate. We had put in some like small shorts. Got taken out of the shorts, obviously. Don't re-enter and let this thing burst to the upside. upside, and then I was selling spot into this dump. We literally, this was an SR flip right here. It happened at exactly noon Eastern Standard Time. And what happens at noon? That's the SR flip. It's literally, okay, the 4-hour candle is going to print. Okay, the 12-hour candle is going to print. Okay, we're going to lunch. What do y'all want to do? We break this out to the upside, and then we hit the noon candle. You hit the button, boom, flip to bearish. All of a sudden, we start selling off, okay? But there's people still thinking we could get continuation to the upside right here. So what are they doing? They're still holding on, thinking, okay, we're probably going to go up here. We have 3.5 hours left till we close this daily. All right, and we have a massive move so far coming up here. It looks great and everything. But what is going to happen? We are going to come back down here and we're going to retest this. We put in our shoulder now. We put in our third peak, okay? And we put in divergence as well on different time frames, on different things. We got the jewel coming up here. We're getting the buy signal after that massive move. We're getting a buy signal on a daily, okay? That's a divergence between the oscillators. I mean, we literally bust up here, and now we're getting at the top of a move. We're getting a buy. That doesn't seem right. That's a divergence between price action and the oscillator. You don't want to be buying after this move right here. So what's going to happen? We're going to come down here, consolidate. When we get back to this level, when we get back to the area that we broke out of, wherever we decide to find support, at the 886 or at the top or whatever it is, wherever we decide we're going to hold that support at, that's the most important thing, because if we do not hold the support back up here, we're just going to dump back down it. And what does this look like? It looks like literally pulling back the bow and arrow, okay? Before you pull back, or before you shoot an arrow in a direction, you pull the bow back and you build up that kinetic energy, and then you use the kinetic energy to force it more powerfully in the other direction. If you barely pull back the arrow, it doesn't go that far. It just kind of goes boom, falls off the end. If you pull it back hard, if you pull it hard in that direction, and then when you let it go, it shoots down in that direction. And one time already, they tried to do that. There was already supposed to be like a big push up here, and then it got bought back up, and then it was kind of just indecision. It wasn't quite ready yet. People hadn't quite pulled their money into Bitcoin. So what caused this bump up right here? What caused that? That was all the money coming back from all these little like micro caps and medium caps and all these altcoins back into Bitcoin. You check out the Bitcoin dominance and it corresponds directly with this move, okay? You check out the funding rate and it corresponds directly with this move. Funding rate is through the roof right now to the upside, okay? So what's going to happen? We sell back off, we find support, we're good. We can keep moving to the upside. But if we don't, we're going to sell off violently and we're going to get that retrace. And when we come down here to the neckline, everybody's going to expect this neckline to hold again. But after a move like this, who knows if it's going to. And that's what we have to do. We have to make sure. Because honestly, I'm extremely bullish on this asset long term. But right now, I am not bullish on it. Now look, this is a reliable signal. We got the histogram above it. We flipped it over blue. That happened right there, right before the sell-off, okay? Happened right before the sell-off. So now let's switch back over to our longer time frame and take a look at what's going on here, okay? Because when we switch over to this thing, it starts being increasingly more clear, okay? Once we take out that high, those Fibonacci's are no longer valid, so we can get rid of them. That's fine. We can use fib extensions to project targets to the upside if we think it's going to continue. But the most important thing paying attention to right now is on this daily time frame right now, we have built a divergence, okay? This was our high right here. That was our peak right there, okay? That was our close. Now look over here. We're now coming up, getting ready to put in another peak. And when we close this up here, higher, substantially higher. I mean, the bottom of this candle is higher than this. So we could sell all the way back down, leave a massive wick behind and close, and we're still higher than this candle right here. But there's no way this peak is going to be higher. Now look, could it continue to the upside? Could we find support right here? Could we move up? Yes. Do I think overall Bitcoin is going to go into an uptrend in the, next months or years, whatever? Yes, I do, 100% with confidence, but not right now. It's not ready. The knife is coming up right now. We have this massive move up on the knife right now. And what I say, we need the knife to come back up one more time and put in a lower high while price action puts in a higher high. So we have the massive knife comes up here and puts in our high. And then we have the little knife comes up here next, puts in a higher high. And that's a divergence between the oscillator. We flip this over red, and then we're going to come back up. We flip it red again. We're about to come back up into the bearish distribution zone. If we cross this over right here, if we get enough move to the upside. But if we don't right now, if all of a sudden this just sells off, and we like sell down here, put in a wick, close below this long-term trend line, and then all of a sudden we fail to get this cross back over on the daily between the blue and the purple or fuchsia, whatever. If we do that, that is going to look like a hard rejection. And then all of a sudden, this is going to print right here. It's going to print a lower high. It's going to print a divergence. It's going to print a divergence, a lower high. on the oscillator, but a higher high on price action. Okay, and that's exactly what happens right before the dump. And then what happens then? We're going to come down here, we're going to hit this blue, all right, and we need to find support when we hit that blue. But we can come down here violently. We can come all the way back down to this 10.8. We can come all the way back down to the bottom of this channel. There's a lot of things that can happen right now, and we don't know exactly what's going to happen, but we have a pretty good idea. And how do we have a good idea? Based on what's happened in the past, based on what these indicator oscillators tell us. So what we're expecting is a retest of first this area right here, then this area right here. So first area that needs to hold is right here, this 12,000. Okay, second area that needs to hold is the bottom of this area, the neckline, like 11.6. And if that breaks, we're going to get our measured move to the downside. And we get that measured move to the downside, what's our next target? 10.8. All right, heart line. Okay, we've got our heart line, we've got our horizontal support, and then finally at the bottom of the channel right here, we have that 10,180. And all that's going to do, it's going to look like a massive Bart Simpson. Look, Bart up, go sideways, put in the Bart hair, aka, you know, head and shoulders, whatever you want to call it, you know, however you want to do it. We come back down here and essentially get the measured move. It's all the same thing. All it is just essentially saying like the consolidation pattern at the top of a trend, Wyckoff distribution, and then we dump back down, find support eventually, and then move back up to the upside, or continue the trend, or flip it over, whatever. I think we're going to continue the trend long term, but I think we're going to get a powerful dump. And this is exactly what happens at the top. People get super bullish. People start buying all these like total junk coins. Everybody's trying to FOMO in. You're fighting it. You don't even know where to put your money because everything's pumping so fast, you know, and all these small altcoins, small market cap coins are getting pumped by like not even millions of dollars, not even hundreds of thousands of dollars. They're getting pumped by like 30 and 50 grand. Like you can just jump into an altcoin and you know, pump it, and there's no liquidity on these exchanges, and they next thing you know, you end up with a 300% pump on Orchid, and nobody can even tell you what it is. No one even knows what it is, and you get a 300% pump. Okay, and this thing's been dead heartbeat in the water since it popped up on, you know, exchanges how long ago, or since it, you know, topped out how long ago. And I mean, it's like that with every single coin, and that's why I don't talk about, you know, these little altcoins and these little like micro cap coins on the channel. Is I don't want you FOMOing into them and then getting stuck with a bag for the next 3 years, because that's what happens. That's what happened with all these things. Okay, and I'm not trying to lecture you. If you want to buy some Beanie Babies and hang on to them, you want to buy baseball cards and pray one day they're worth something, that's completely fine. But I want you to buy them knowing you're going to be holding on to them forever. I do not want you to capitulate based on time because you got stuck in some crap coin. I would rather you be stuck in Bitcoin and take a minor drawdown, but be confident that one day it's going to be worth more money than what you bought it at, as opposed to some altcoin project that's going to die long enough that eventually everybody just gives up, and then the creators just go and create something different, and then all of a sudden, you know, that coin's dead. There's nobody even working on it anymore, and you got somebody just holding a bag hoping one day it works, but there's not even anybody working on it. So anyway, that's what I'm seeing right now on this daily. Now let's switch it over to the monthly. This is where, or the weekly rather, I'm sorry. This is where I'm really starting to pay attention to what's going on, and you really want to look at what's happening, okay? This is our parabolic trend line, this yellow line right here, okay? We were talking about this in the group today. This yellow line is a parabolic trend line of the trend that we're finding support on from so long back here, okay? And we had the blue one and we had the green one. And when we came down, we bottomed on the green right here, we bottomed on the green right here, and then we've been finding support on that yellow. But now look, we broke down from the yellow and came to the green. We came all the way back up, retested the yellow, failed, consolidated, retested the yellow. We burst above it right now, okay? We're above the yellow right now. But that's the line we're looking at on the daily. If we all of a sudden start selling off this wick or whatever, and we come back down here to that 12,158 range, which if I had to guess, honestly, based on, you know, price action and previous, you know, basically like every time I've watched these markets ever, what's about to happen? We're literally going to sell off from 12,300, and we're going to come down here and we're going to close right at that resistance at 12,150. So we sell off like 160 bucks in the next couple hours, close right at that support or at that resistance, and then this is going to happen too. We could potentially attempt to burst back up again, and then boom, we get that massive sell back off. And that's going to put us right here back at the neckline. And then when we get to that neckline, we need to pay attention, because this thing has been saving price action so much lately. We've been getting all these wicks below it. Everybody that's tried to short this neckline so far has got wrecked, but every time we've bought it so far, we've been profitable. So what's going to happen when we come down here? Everyone is going to expect this neckline to hold. And what do we know? We know that once everybody sees the same thing and expects the same thing and gets excited about the same thing, it's not going to work anymore, because everybody sees it, including the guy that's going to just dump on your face. All right, so that's what we're paying attention to right now. So we're about to put in this divergence. We're about to come up here, about to get this cross, But I'm telling you, if we don't get this cross, or we do get the cross and then we sell off, we're going to basically get the hard buy immediately followed by the hard sell. And then let's go over to the weekly time frame and look at the most important thing on these indicator oscillators, all right? Look at this price action just marching up. But what's happening? In an uptrend that's consistent and going to keep going up, what happens? We're moving up strong. You know, there's a fight right here. You don't know what's happening. Moving up strong, kind of consolidating, but we're going in a parabolic trend. We're going up stronger. Each candle's getting bigger. We're moving faster. That's a parabolic uptrend working. And then what happens right here? We start rolling over. You see the price action is like going up, but it's going up slower, constantly slower. And then we consolidate. And then look, this was our price action moving up faster. But what happened right here? What happened right here? All of a sudden, we started going up lower. We started going up a little bit slower. New high, but a little slower. And now this is what I showed you that other video for. This is the whole reason we showed it to you. All right. This flipped over above our slope line and was green. We sell back off. We found support on it and moved back up. We found support on it right here, moved back up. Now we were in the bearish distribution zone, but we never got the hard sell because we found support, which is fine. That's great. That's what we were expecting to happen. We were in the bearish distribution zone. We come back down and look, the blue bounced to purple and we move back up and it looks good. Price action looks good. It looks like we're continuing. And then what? We entered back into the bearish distribution zone. And what is the most reliable signal that we take? The distribution zone followed by the hard sell or hard buy. I'm sorry, accumulation zone followed by the hard buy. Distribution zone followed by the hard sell. Accumulation zone followed by the hard buy. Now look, we didn't get it over here. So look, distribution zone followed by the hard sell. I think so, because every time before that, it preludes it. Look, we got the touch and then we got the full thing. We got the cross fake, we got the cross fake, and then look, the touch right here, this is going to be the real thing. I am confident this is going to be the real thing. And now everybody's so excited because we're putting in a new high here and we're moving up, but this is our high, that's our low. Everybody's saying this is our new high and that's a higher low. But what happens right now, if this right now sells off, then it looks like we have a high, and then it looks like we have a low, and then it looks like we have a lower high. So what's going to happen after that? We could come down and put in a higher low, or we could come down and put in a lower low. We could literally come down and put in a lower low and just confirm this is still a strong trending downtrend consolidation. And I know people don't want to hear that, but it's important that we pay attention. Now look at these signals and what's reliable. Look, sell off at this, dump. Accumulation zone, hard buy, continuation. Distribution zone, hard sell. We get the buy right here at the top, which was the divergence. We even talked about that specifically. We said there's no way we should be getting a hard buy right here while we're underneath this trying to save it, and then we got rejected. And it did exactly what we said. And then we said we were going to come back up and test it. Look, we came back up and tested. We got the hard buy at the end of the accumulation zone. And look, continuation. And then what happened at the top here? Same exact thing again. We get rejected and then we sell back off. All these histograms in a row. And then how did we know this was not, how did we know this was the bottom? The same exact reason. A divergence. We got the sell after a massive dump. That doesn't even make sense. We got the sell at the bottom. You don't get the sell after a massive dump. So that's why we took position out of here. And then look, go up, go up, go up. And then look at this divergence. At the top of the trend, we get the buy. The same as this one, because it's less reliable. It's a divergence in the oscillator indicator compared to price action. And then we finally cross this back over and we almost dump it right here. And then what happens? We come back down and we found support and then we move back up. But now this thing is getting ready to switch back over blue. And when it does, that is going to be a long trending trade to the upside. And that's the trade that we are all about. That's the trade we've been waiting for. This trade right here we've been waiting for. You know, this trade, like right here we've been waiting for. These are the trades we want. We want these massive trades, these massive swing trades that we can stay in and just sit back and just collect gains, okay? And that's like a trend reversal temporarily in the micro of a massive macro trend. And keep in mind, we're on the weekly now. So when this comes up here, we're getting ready to flip this over blue. It could even flip over blue at the end of our next weekly close. It could flip over blue with enough price action right now that it drags it up, and then it could sell all the way back off down to it and flip it back red, because it won't print until the end of the week, but it will show up on the chart like real time. So we have to be very careful, very careful. Now look, distribution zone, but we didn't get the hard sell. So we re-entered the distribution zone. We bounced it now. All it takes is just one more time to come back down here. We could bounce it again, come up again, or we could dump back down, and we will get that hard sell at this point in time. And when we get that hard sell on the weekly, that is going to be a strong trending downtrend distribution, and it's going to last. All right, and that is going to be one of the most epic fake outs probably we've ever seen. And every time that has happened, when it happened here, nobody believed it. When it happened here, nobody believed it. Okay, and then when it happens here, nobody's going to believe it because everything's so bullish. But the truth is, we are inside of another bubble, and everybody is so worried about how much money they're printing and how fast they're printing money and devaluing and everything. And the truth is, we are not printing fast enough. The economy is stagnating. They printed $6 or $7 trillion, and we're only really missing like 550 billion out of like the GDP at this point in time. So they had to print so much money. They literally printed like 15 times as much money is missing, and they printed it out and they gave it out. And this is the United States I'm talking about, and it still wasn't enough. They printed that much money and gave it out, and it was not enough to keep the economy going, to keep it running, to keep it going, because that's not the problem. The money isn't the problem. The cash isn't the problem. The economy is stopped. We're not building anything. We're not making anything. Businesses are going to go out of business. Things are going to change. You know, I'm not trying to doom and gloom you, but let's be real here, guys. Everybody gets the most bullish at the absolute top, and everybody gets the most bearish at the absolute bottom. And we're not going to fall for that because we know what's up, okay? So exactly what's going to happen right here. We're going to keep going up here. We're going to put in that wick. We might even get a little more continuation. We could literally get another week, 2 weeks, 3 weeks of continuation. Okay, we could come all the way back up to 13,000. We come to 14,000, 15,000. We could put in another massive wick like this, and it would not change anything. It wouldn't change my mind at all. But we need to be very careful because this is where you get got. All right, this is the most important time in the market. We get this right here. We're going to stay in this red distribution zone, but at some point in time on this weekly chart, once we're in this distribution zone, we are going to sell off and get that hard sell. And when we get that hard sell, the same way this was an amazing buy, the same way this was an amazing sell, the same way this was an amazing buy, those are the trades we wait for. I talk about all the time, I would rather take 20 trades, and I would rather just break even on all of them and then have that one massive trade, that one swing, that one just crush it, that one position, okay, because that's what this is going to be. You know, this isn't a positional trade because we sold back off afterwards. This isn't a positional trade because we're getting ready to sell back off afterwards. But when this one sells off this time, this could be legitimately, if we can put in another higher low, this could be the one. This could be the one that leads us to the new highest high of Bitcoin, the blue sky breakout, the $30,000, the $50,000, the $100,000. All the moon boy dreams could come off this move. But before that move happens, we have to sell back off. Because if you think all of a sudden we just moved up here in the bearish control zone and then sold back off out of it, and then just like, oh no, we're going to continue actually, and then we just kept going up, if you think that's going to happen, we already got this massive move right here. We already got, let me look at it. We are already up 215%, okay? So if you want to be realistic and you want to compare these things and you want to look at them in a way that's comparable and realistic and measurable, 330% last time, okay? And what happens when a ball gets dropped from high? You drop it and it bounces, but it bounces less. And then it drops again and bounces, but it bounces less, okay? And even if it bounces up higher than this one, it's still bouncing less than this one. So we come down, and that's our one wave. And then this could be our two wave up right here, the correction off of the dump. And then we could get a three wave that comes down even lower, or we could get a three wave that comes in higher. But regardless, that's when we can potentially look for that position again. You do not want to be taking positional trades to the upside after a massive move like that. It doesn't even make sense. And then same thing here. You know, you're going to take this position to the downside. You do not want to be selling down here after this massive move to the downside. And it's the same thing again. We're back up here at the absolute top of the range. We're back at the absolute top of the range, the strongest resistance, the hardest area to get through in Bitcoin that we've been unable to get through countless times, all right? And now I'm not saying we're not going to keep going up because I think we are going to go up, but we're going to sell off. And that is when that's when people are really going to get wrecked, and everybody's going to get scared away from crypto again, and we're going to lose all the new people that we picked up this whole time, and the masses are like flooding into this thing, and everybody's so excited thinking we're going to keep going up forever, and the stock market's going to keep going up forever, and we're going to keep putting in highs. Well, look, we're already starting to print divergence on so many things. We already have a clear divergence between reality and the actual markets, like the economy. Like stock market is all-time highs. Economy is probably the lows of our lifetime, the least production we've ever seen in our lifetime. And now look, I'm not saying it's anybody's fault, but the truth is we're not producing anything. There's nothing going on right now. It's literally stagnation everywhere. It is starting to hit people that, hang on, we might not just be coming out of this thing. And they are not sending out enough money. I know people don't want to hear that, but look, they've got to print so much money to keep this thing going, and we're not even close to hyperinflation. We might see inflation on certain assets like food and meat and fresh produce and, you know, things that people need. Low cost housing, because people are going to be moving out of their fancy place. They're going to be moving out of their big leases. You know, they're going to be getting rid of their Mercedes and their BMWs and all this stuff, and they're going to start driving Toyotas again. Like, the whole deal is going to change. It's a whole different level. And if you think that's not going to take years to get out of, my only point is, and this is not financial advice, I'm not your financial advisor, these markets are extremely volatile, so please do your own research and trade responsibly. Right now, you take a trade out of this area, and there's so much risk to the downside. But if you just wait a little longer for confirmation, and you miss out on a couple of gains, a couple of percentage, you know what I mean? Maybe even one double up. Maybe it doubles up from here, and you didn't get back in, and it's already at 24,000. If it's at 24,000, you're buying into a blue sky breakout. So that's what you want to do, buy into strength. And that's completely fine. That's the best case scenario for us. But if this sells off right now, and I'm right about the economy, and I'm right about what's going to happen, I'm telling you, you're stuck in this for months, for years, as it just goes down, and eventually, if you don't capitulate because of the price, you're going to capitulate because of the time. Because you know how many people thought this was it and got involved here in 2017, and here we are, years later. We're almost to 2021, almost 4 years later, and this is a bearish accumulation or distribution pattern. Whatever you want to call it, it's bearish because we're putting in consistently lower highs. If this thing was bullish, we would be putting in consistent higher highs and just slowly floating up. And that's what's happening in the stock market. You know, it's a full-on melt up. But that's not what's happening in crypto, because there's just not enough people involved in it, enough money involved in it. And I'm not saying it's not going to burst out in the future, but what I'm saying is, if you look at your risk reward right now, if you take one of these risk reward trade setups and you start looking at it, you tell me where it looks good at. You tell me where this looks good at. I don't see a trade that looks good. What trade are you going to take? You're going to take this one up here, and then you're going to take what? Just a little guy stop loss right there? Okay, that's cool. By all means, take a trade like that. That's fine. But why risk it? All you got to do is not lose your money right now. And if this thing breaks out, we're going to new highs. We're going to crush. Everybody gets paid. And you hold your account and you don't lose it, you can buy in and it will be exponentially more valuable. And the same thing if it sells off. If it sells off down here and you don't take a hit, that's it. You still have your whole account and you can rebuy and get a good entry, and then you can buy at the bottom instead of buying at the top. Never want to buy into resistance. And this is strong horizontal resistance that goes back years. I will not buy into this area right here. I will not buy into this area right here. Smart people, what they do when it comes up here, they sell into it. They sell into strength at resistance. And that's what's happening. You know, and then what happens to people that don't know what they're doing? What happens to guppies? Okay, they short the absolute bottom. They short after a massive dump thinking it's going to zero. But that's unrealistic. It's not going to happen. Let's look one more time at these moving averages. I just want to show you it's the same exact thing again. Look, everybody got so bullish right here. And what happened? We got so far away from the 200 moving average. We got so far away from it. We took out the parabolic SAR. We're in this massive move up. And then finally what happens? We come all the way back down to the SAR, come back down to the 8, come back down to the 21, come back down to the 50, come down to the 55, to the 89, to the 200. I mean, that is ridiculous sell-off right there. So if you think for 1 second that we're more likely to just go parabolic forever because somebody told you about Bollinger Bands, or somebody told you that we closed, you know, a micro candle above the previous resistance, you need to just stop listening to that person right now. And after this dumps down here, and I'm right, I want you to come back. I want you to unsubscribe from whoever it was that got you wrecked. And I want you to come back here and subscribe to your boy. And I want you to leave it in the comments and be like, man, I wish I would listen to you. Because it happened right here. It happens right here. it happens right here, it happens right here, it happens right here. It's the same thing over and over again. All the moon boys get big through all this stuff here, but your boy just slowly creeps on by because I do actual technical analysis, all right? And what's going to happen, this is going to sell back off down here, and I'm telling you, we are going to touch this parabolic SAR. It might not be for a couple weeks, but we're going to come down to this 8, and that 8's at 11,063. We're going to come down to that 21, and this is the most bullish area that we could come down to. We broke through resistance. We broke out of this. I would like to see us come down and retest. If we come down here and we retested this horizontal support area, this right here, we test that as support now, as it was resistance over and over again, and we find support on that at 10,000, 9,600, and that's by the time the SAR gets there. Maybe we come down and find support. We take out the SAR, flip it over bearish. Everybody gets bearish again, and then boom, we find support and we move up. Maybe not. Maybe we come down to 200. But regardless, I'm telling you right now, the way I see these charts, the way I see this space, the way I see everybody FOMOing in and getting all frothy at the mouth and getting greedy and everything, and this is exact time when they sell that hope to you, when it's least valuable. And all of a sudden you buy that hope. Everybody's talking about it. I mean, that's on like, CNBC, back mainstream. People are talking about Bitcoin and cryptos and all these breakouts, and everybody's, running into all these coins and everything. And I'm telling you, people only pay attention to crypto at the top. Normal people only run into crypto and pay attention at the top because the bull run has already happened and they heard about it and they feel like they're missing out on it. And that's what FOMO is, fear of missing out. And that's how you buy the top, okay? Because I'm telling you right now, when this was dead down here and there was nothing going on and we were accumulating and people were saying it was going to $1,000 and it was going to dump and everything like that, wasn't nobody paying attention. There wasn't no content being put out. Nobody was talking about Bitcoin. Nobody was talking about crypto. And look, when we sold off right here, they said it was dead. Bitcoin's dead. Bitcoin's dead. It's done. No, I don't think so, bro. Look, we didn't even close below the 200. That was your sign to take a long. As soon as we got bought back up aggressively like that. But look, that's scary. People don't want to buy into something that already went like that. But you do. That's called technical analysis. You do want to buy into that. It sold off violently and then finally showed strength because it got bought back up to a key moving average. So if you thought, oh, this is breaking, I'm going to take a short. Next thing you know, this was back in a couple hours, right back at it. Pumped all the way back up, sold back off. Indecision candle. But if you see an indecision candle like this on top of a key moving average, that means it found support. That's bullish. So that's it. Continuation up here. Hit our head. Busted through it. And now what? Everybody's pumped now. Everybody's excited. What I think is going to happen, I think we're going to close right back where I said. I think we're going to get a wick up. It looks like continuation because everybody's going to be bullish because of how the close closed. And then they say, oh, that's great. And they buy into it all of a sudden. And then it pumps it up one more time because everybody buys because they say, oh, that's confirmation on the daily. Let's go. We're going to new highs. And they buy in. It pumps up. And then all of a sudden, people like me are going to short straight into their face. And it's going to get massively sold back down. And then you're going to... Not you, but they're going to get wrecked. It's going to come back down. We're going to test these moving averages. And then finally, if we can find support on one of these key areas, we find support, we get the break, we get the retest of the breakout, and then we get the confirmation, means we found support, and then we can get continuation. And that is the most important thing right here, right now. And what's going to happen? We're going to come up here and we're going to get that hard sell. We're going to print that hard sell after the distribution zone, and we're going to get one of these guys. We're going to get one of these sell-offs like that. And even if we do, like I said, if we come down to 200 now and it's slowly creeping up, that's fine. I mean, it could be about $8,000 before we touch it if it wants to come up here. But more realistically, it's probably going to be closer to like 7,300. It's probably going to be closer to like, 6,500, something like that. And that's what I think our target is long term. Because I'm telling you right now, if Bitcoin's at 12,000 plus, 13,000 plus, 14,000 plus, whatever it gets up to here, when it goes back down to 6,000, 7,000, 8,000, it's going to scare away all the new people again. All the new people that got into it throughout this range. All the people that started learning about it and heard about these new altcoin projects and bought into, the whole DeFi scheme and all this stuff. And then meanwhile, what is all this stuff built on? Ethereum. And what's going on with Ethereum right now? Ethereum is at $400 out of, it's $1,300. It's a third of its all-time high. And meanwhile, all these new projects are built on top of Ethereum. And these new projects are going to new highs because everybody bought into them. It's just all the money's just circled into these couple coins. It's breaking out. There's like 2 or 3 coins making all-time highs right now. There's a couple cryptos in all of the space out of 5,000 or 10,000 or whatever cryptos there are. And you got literally You can count on one hand how many are making all-time highs. Meanwhile, every other market in existence, like every other American market, the stock market, the gold, the silver, all this other stuff is at all-time highs. And the truth is, the only reason this stuff's even pumping up, it's not because your Bitcoin's worth more money. It's not because your cryptos are bullish. It's because we're devaluing the currency. So everything's going to look like on a chart it's more valuable, but it's not, okay? And I'm not saying Bitcoin won't be a store of value. I'm not saying, crypto isn't great for, decentralized, transfers of money and all this. I'm not saying crypto's dead. I'm not saying I don't believe in it. But what I am saying is there's very few working products. There's very few legitimate projects. There's very few cryptos making all-time highs. And look, I know you don't want to hear it, but the number one priority of this channel is to protect our wealth. Because if we don't ever take a big loss, we get to keep playing the game. So we can take a little loss, we can take a little win, okay? And they can cancel each other out. But if we avoid those big losses by never buying at the top of the trend, if we avoid those big losses by being smart with our trade setups, only thing left after those little wins and little losses cancel each other out is big gains. So all we have to do is protect our account, protect our capital, and then we can get those big gains. And that is going to be that life-changing money. Because how many people do you think get wrecked and sell down here, quit the game, get taken out of the game, don't get to play anymore? And look, I'm telling you right now, when this happens and somebody gets wrecked and then it comes back up and then makes a new high, they don't even want to play anymore. They don't want to play this game anymore. They don't want to play with Bitcoin. They don't want to be a part of this space. They're going to call it manipulation. They're going to say it's a scam. I'm telling you, I've seen it over years and years and years, and it's the same thing over and over again. The only reason all these cycles work in the economy, the only reason these cycles work all throughout history, not only in cryptos and stuff like that, the only reason Fibonacci, sequencing, and all this stuff works is because it's literally just the same thing over and over again. That's exactly what it is. The same patterns, the same cycles over and over again. And in order for those to work, you have to have new people. Because if everybody's already hip to it, it's not going to work anymore. All right. So that's why these patterns play out, economic patterns. When did we have the Great Depression? Like 20s, 30s, you know what I mean? All through that economy crash, all this stuff. Start reading papers from the 1920s and the 1930s about what's going on in the economy and the credit and everything getting blown above and until like the credit had to contract because it was like 100 times, the actual like amount of money that's out there. And there's I'm telling you, look into some of this stuff and look into patterns and look into cycles and you will truly understand where I'm coming from with this stuff. These markets are like a heartbeat. They breathe in, they breathe out. They breathe in, they breathe out. So now what is going on right here? We breathe in, we breathe out. We breathe in, we got the wind knocked out of us. We breathe in, kind of held our breath. Breathe in one more time. Breathe in again, breathe in again, breathe in again. Eventually you cannot breathe in anymore. And what do you have to do? You got to breathe out. And what's about to happen? We are getting ready to take that final little breath, and then we're going to breathe out. And now where are we going to go? I don't know yet, but we're watching, okay? And we're going to do this every day, and we're going to see where we're going. And look, when we find out where we're going, we're going to take a stab, we're going to take a stab, we're going to take a stab, we're going to take a stab until finally we get it right. But we're going to do it with proper risk management and position sizing. And look, that's the last thing I'm talking about today before I get out of here. Okay, I want to talk to you right now without using a visual, just because I don't feel like messing with all that. I want to talk to you about position sizing, okay? Because I'm going to tell you right now, when I first got into investing way long time ago, like 1990 something or whatever, I went all in on one thing. All right, I didn't diversify into different asset classes. I bought like just some random index fund that had been killing it, and they're telling me about all these games. And then what happened right after that? We get the stock market crash, okay? And I got wrecked. I lost like 50% of my money, whatever. And finally, I was just like, this is stupid. Why do I even want to be a part of this? I'm trying to get out. And that's what happens to people. That's exactly what happens. And then you watch it go up for the next how many years? You watch it go up for 5 years, 10 years, and you slowly start dipping your fingers and stuff, but you don't even want a piece of that anymore because it left you burned. It hurts your feelings. You know what I'm saying? It's like an ex. Like, even if you like still like them and they're fun and you could have a good time, you just always are going to think about that bad time, like what happened and how they screwed you over or lied to you or cheated on you, whatever it is. That's always in the back of your head, okay? And that's what these markets will do to you. And that's why we have to be so careful right now. So now I want to talk about that allocation, okay? When you're trading or when you're hodling or when you're whatever you're doing right now, whatever trades or positions or whatever it is that you're into, You do not go all in on one thing at one spot. That is not what we do, okay? You take your account, all right, say we have $100, all right? You're going to take that $100 and you're going to break it up into different pieces, all right? So say you want to use 10 breaks down. You break it down into 10 parts, okay? Take that $100, break it down into $10 parts, all right? So now you have $10 each, and you have 10 different opportunities to use that $10 to make gains. You have 10 coin flips that you can participate in with that account, okay? And if you have a 10% stop loss on each of those 10, so 1/10 of 1/10, that's 1%. So you can run a 10% stop loss on each one of those trades that you make, or each one of those chunks of your account. And if you lose that stop loss, if it wipes out your stop loss and you lose 10%, you lost 10% of your 10%. You lost 1% of your whole account. So you lost $1 out of your 100. Who cares? That's nothing. You can get that back easy. If you take your whole account and you trade and you make one bad trade and you lose 10%, you're going to feel wrecked, okay? And then what are you going to do? You're going to just overly try to get back into something to get that money back, because now you're down and you got to get back up. So then what happens? You make another bad trade, you lose another 10%. You buy back in at the wrong spot, you lose another 10%. Next thing you know, your account is 50% of what it was, and you're wrecked, and you don't even know what to do anymore. You lose your confidence. Like, no, we're not doing that. We're not playing that game, okay? We're winners. We're going to take good trades, and we're going to spread them out reasonably, and we're going to enter them. And you don't have to enter into different assets. You don't have to enter into every asset class, whatever. You know, when you go into a short position because you think something's going down, or you go into a long position because you think it's going up, one coin might go up. Bitcoin might just go sideways forever, but Ethereum was going up. So it's like, damn, I should have put into Ethereum. And then you switch into Ethereum, and all of a sudden Ethereum's just sitting around doing nothing. And then all of a sudden Bitcoin breaks up. And you go, man, I should have got into Bitcoin. Then you go back to Bitcoin. That's why you just diversify. Why not just take one entry in Bitcoin, one entry in Ethereum, and one entry in one of the altcoins or whatever? Why not take, you know, even if you don't want to trade multiple assets, you just want to trade Bitcoin, you just want to trade Ethereum, whatever. That's perfectly fine too. But why not split it up into 10 pieces? Why not, if you're looking to get into a trade, you're looking to get into a position or whatever, why not take multiple entries? Why not say, I'm going to buy into strength. I'm going to take one right here, and when we continue up, I'm going to take another one. And when we continue up from that, I'm going to take another one. And you can just buy into strength. And you watch that last video we did, and you learn why it's so much more important. Because you're not in a drawdown. You're constantly making more money. And you don't get reckless. You don't just keep betting more and more and more, putting more and more and more into it. You keep periodically buying into it and buying the same amount or whatever. You don't just say, okay, I'm going to buy $100 worth right here, and then it breaks out, and then you go, I'm all in now. That's how you get wrecked. You get greedy. That's what it is. The markets are supposed to make you greedy. And right at the last minute, when you absolutely cannot believe this pump and you're missing out on it and you go to buy in, that's that FOMO kicking in, and that's that greed. That's the only reason you feel FOMO is greed. Because if it's going up, you're not losing anything. So why are you FOMOing in if you're not losing anything? You literally, this was a good example that we had in the group the other day, because we were talking about FOMO, and I said, I want you right now, if you're feeling FOMO, to tell me right now, pick a coin, pick an alt, pick Bitcoin, pick an asset, whatever it is, and I want you to tell me 3 technical reasons why you want to buy into this right now. Right now, as it's breaking out, as it's making new highs or whatever, as we're like at resistance, okay? And if you can give me 3 legitimate reasons, by all means. You know, but at least you're sitting there and rationally thinking about it, because that's what FOMO is. It's irrational decision making. Because every time I've ever FOMOed into anything, every time I look back and I say, what was I thinking? It didn't line up with my technicals, didn't line up with my fundamentals. I don't even know why I entered into that trade. What was I thinking? And it seems like a terrible decision in hindsight, but hindsight is always 20/20. And it's not always going to be a loss. Maybe you FOMO in and then it does break out and you make out good. You know, and you're like, see, I knew it. Well, that's the riskiest kind of trading you can make, is buying the breakout. So, but anyway, our example the other day was, we see an asset going up, and we feel FOMO as it's going higher, right? Because it's a trading asset and we're getting greedy. We see it going down and we get scared and scared and scared and scared, and we don't want to buy it. Oh, it's going to zero. If you went to a car dealership and you were looking for a car, and the car was $20,000, okay? $20,000 for this car. And you say, I'm thinking about getting that car. I'm gonna think about it, whatever. And then all of a sudden, you see a TV commercial a week later, and all of a sudden this $20,000 car is $40,000. And they say, this thing $40,000 now. We just found out it's the best car there is. The gas mileage is even better than we thought. You don't even have to charge a battery. It's amazing. This car is so great. And now it's going to be $40,000. You don't just rush out and say, oh my gosh, I wish I would have bought that thing at $20,000. Now I'm going to buy it at $40,000 before it goes to $60,000. No, it doesn't work like that. It's the opposite, okay? You say, no, I'll wait till it comes back down. I'm not going to buy that thing right now while it's in a bubble, while everybody else is trying to buy it. So why do we think that way about assets? And same thing with when it's going down. If it's selling off and it's dumping and it's dumping and it's dumping, if you believe in this, if you want to trade Bitcoin, you believe in Bitcoin, you think fundamentally it's good, technically it's good, when do you want to buy it? You want to buy it the same way you buy your goods. You buy it when it's on sale. Okay, so you wait until all of a sudden you get an ad, see an ad in the paper on TV, or you get a call from that guy at the dealership trying to make his quota, and he says, look, I'll tell you what, dude, you were looking at that car at 20, you like it at 20? And you go, yeah, man, I liked it at 20. And he goes, what'd you think when it was at 40? And you go, I don't think it was worth 40, man. And he goes, what if I told you I give it to you right now for 10? All of a sudden, that's so much more appealing. That it's 50% off. Yeah, man, that sounds like a deal. I was thinking about buying it at $20,000, and now it's at $10,000. So I'm definitely gonna buy it. That's a great deal. Let me get my finances together. Let me talk to the old lady. Whatever, I gotta get my stuff in order, and then boom, let's go. We need to retrain our brains that we buy the dumps and we sell the strength. We sell into strength. We buy into weakness. Okay, that's what we want to do on these. If we're looking for that reversal going up, if we're looking for that big move. But when we're looking for an actual bottom or an actual breakout or whatever, we want to buy into the trend or sell into the trend, but you still protect yourself. You always put in that running stop loss. You always, set your risk reward. You always make sure that you have an attainable, actual, realistic goal in mind. And if you do that, you will be exponentially more successful than if you just don't have a plan and all of a sudden you go into it. Because when is the last time you ever did anything important without planning ahead or studying for it or whatever? You don't go on vacation and just say, let's wing it. I didn't even pack a bag, let's roll. You say, I thought we were going to Walmart. I thought we were going to the gas station tonight. We decided we were going to go to the Grand Canyon, did a tour around the country. No, you plan it out. You pick a couple spots you want to go. You look for like key stops. You know what I mean? Things along the way. And that's all technical analysis is. When we're down here, we're looking for the moving average as a support. That's one of our stops along the way. You know what I'm saying? And when we find that and it starts going the other way, we say, okay, where are we going to look for resistance at? We're going to look for those moving averages in here. We're going to see, okay, let's take a trade off this area and see what happens. And if it keeps going up, we're good. But if it sells off all of a sudden, we have a pivot on the market, a clear definable range that we can worry about. All right. And this is the last example I'm doing today. The coin flip example. And that's it. We talked about it the other day. If you have two things going for you, you will be successful in these markets. There's two huge advantages you can have. And one of them is a higher win percent. If you and I flip a coin and every time it's 50-50, if we flip that coin 1,000,000 times within probability, within a couple little decimal points, we are both going to win the same amount of coin tosses, okay? But if you have a slight advantage on that coin toss, if you win one extra coin toss, if you get 6 and I get 4 now, over time, you are going to consistently make gains. All right? And that is extremely, extremely important because that is your edge on the market. That's your advantage. Okay? You're making more each time you win. And that is why risk reward is so important. That is why we never trade 1-to-1 risk reward. We always look for 2-to-1 or 3-to-1 or 5-to-1 or whatever. Because we can lose that one time on a 5-to-1 trade. We can lose that trade 4 times. We can lose 4 5-to-1 trades and we get one and all of a sudden we're up because we just did 5-to-1. We lost 4-to-1, 1-to-1 4 times, whatever. So we end up 1 out of our 5 bets. And that's all it is. You know what I mean? You're just making educated bets based on technical analysis. And it's the same exact thing with percentages. If you're going to risk the 1% to the downside versus 3% to the upside, it means you make more. You could win the same amount of times. You and I could flip that coin again 1,000 times, 1,000,000 times or whatever. But if every time you win the coin flip, you get a little more money than I do, you're betting $1 against my $2. Well, if we each win 5 coin flips at the end of that, you have 5 wins, or you have $10 from your 5 wins, and I have $5 from my 5 wins. So you are net 5 ahead. So if you take those two factors and you put them together and you say that you are going to take a higher than 50% probability of a win, and every time you do win, you're going to make more than what you lost, over time you will consistently be successful. All right. And it doesn't matter what you're trading. As long as you're trading with the trend, you have the highest probability of winning. And as long as you're trading intelligent trade setups, you have the largest amount of like risk reward basically. But if you just start calculating position size based on how much you want to risk, and you just say, I'm going to take this $100 and I'm going to risk 10% of it, and if I lose, I'll take out the trade. That's not how you calculate position size. That's how people do it. People do it all the time. They calculate position size based on how much they're willing to risk out of their whole account. That doesn't make any sense. So you're saying, I'm just going to take this trade because I think it's going to go up, and I think I'm going to only risk 10% because that seems smart. Well, where does your 10% land at? In the middle of nowhere? You know what I mean? What are you going off of? No, go off of key pivots in the market, key moving averages, key support, resistance, whatever it is that you're using. If you go off of that, the closer you are to the pivot, the closer you are to the area where you're going to find out if you're right or wrong, the less you have to risk. If you're in the middle of this area right here and you're thinking it could go up here to the 90, it could go down to the 200, but right smack in the middle, the trade's going to be the same either way. It's going to be 50-50 either way. You got same amount of risk to the upside, same amount of risk to the downside. You have no advantage that tells you it's going to go up or down. But if you're right here at the 89 and you say, okay, I think we're about to get rejected and go back down here. You take a trade at the 89, you only have to risk a couple percent to see is it going to keep going up here. But if it does, you want to be out of that trade and then it continues, just like it did here. You risk right here. And if if you're wrong and it's going to continue, it takes you out of the trade and then continuation and you're good. But you're out of the trade. But if you're right here and you take that short, if it went down right here, there's an exponentially better chance of how much money you're going to make. You might be making like 10-1 on the risk reward here if you go off this. So even if you do that, if you take the same bet off these moving averages 100 times, okay, but you take it off the moving averages with a higher risk to reward ratio, even if it's 50-50 whether that moving average holds or not as support or resistance, you are still going to win over time. And it's the same exact thing with it. If you have an actual technical edge, which is what all these indicator oscillators are, which is what all this stuff is, this is our technical edge, okay? And if you trust that technical edge and you can repeat it over time, you can increase your hit rate substantially. So if you have a higher than average hit rate, say you're winning 6 out of 10 trades, and I'm winning 4 out of 10 trades, and we're trading against each other, and let's say you're making 2-1 odds on me, you're betting $1 against my $2. If you take that into account and you win 6 times and you win $2 each time, you made $12. And if I win 4 times and I win $1 each time, I made $4. So when we net that out, okay, we take my 4 that I won away from my 12 that I lost. That means you won 8. You made 8, whatever, dollars or whatever it is. And that is what this game is all about. It's all about picking your poison. Pick your trades and do intelligent ones. Because the truth is, it does not matter if you make more Bitcoins, because you're not going to do anything with your Bitcoin. What are you going to do with it? You're going to use it to get money, to buy goods, to enjoy life. Okay? But Bitcoin is not actually going to do anything for you. You don't need to accumulate as much Bitcoin as you can. That is literally collecting baseball cards. All right? If you say, I'm going to collect Bitcoin, you're in the 21 club, whatever you say, I want to be in the 21 club, that's fine if you want to do that, man. But you're doing it because you want to be cool. You're not doing it because you need 21 Bitcoin to all of a sudden have enough money to finally buy the house of your dreams. The actual crypto doesn't matter. We're all in this for the same reason. We're all in here for gains. We're in here to make money. We're in here to have a better life for us and our family to provide, okay? So you make sure you remember that when you think, I'm afraid price is going to run away on me and I'm going to have less Bitcoin than I had before because I sold too soon. That's what you're supposed to think. That's what FOMO is supposed to make you feel like. But the truth is, if you think for 1 second that just because we're coming up here now to this area again, we're never going to come back down again, I'm telling you right now, we're breathing in, breathing in, breathing in, let a little bit out, breathing in, breathing in, breathing in. Eventually, you got to take that big breath out. And that's the bubble. And that's what these indicator oscillators tell you. This tells you how long you've been breathing in for. When it's blue like this and you see that histogram up, it tells you you're running out of capacity for breath. You can only get so much breath in them lungs. And it's the same thing here. When you're blowing out, blowing out, blowing out, You can hold your breath with no more air in it. But eventually, you gotta breathe. And that's what the divergences are all about. And that's what these indicator oscillators are all about, is to keep us in check and let us know where we are on that cycle of everything. So you guys see what it is. You know how I feel. Every time we get to the same area, every time we get to the top, I come on here and I have to lecture people, and I have to tell them, like, look, don't make that same mistake everybody else made. And I tell the story. I tell the same story every time. And look, and then you know what I get every time? Somebody says, man, that's exactly what happened to me. They say, yeah, I found your channel, man, a while back, but you seem like you know what you're talking about, but I didn't want to listen to it because I'm ambitious. I believe in this asset. I wanted to go to 1 million. Like, I got all pumped up. I was Moonboy mentality. And then what happened? All these dudes are saying, buy, it's the last chance. We're never going below 12,000. This is it. We're going to 20. We're going to 50. We're going to 1,000, 100,000. Like, they're going to just say the same things over and over again every time. And then what happens? They get their whole community wrecked. And then it sells back off. Well, look, I would rather tell you to be safe with your money and careful with your money. And you're not going to listen to me anyway, because it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I'm going to tell you right now, okay? You're going to do whatever you want to do anyway. But if I help you to not get wrecked, you get to still play the game, okay? But if you bought in right here on this big boy, you bought in on that big boy candle, if you bought in on that, these people aren't playing the game anymore. They're gone. These people are gone. I know most of them. They're gone. That's my buddies. That's the guy who got you into crypto. That's you know, some guy you used to work with. That's some dude who was watching CNBC. And look right here. What do you think this is? That's a stop hunt. That's all that money coming back out of all those trash bag altcoins. And you know what they look like now? They look like death. Okay? They're done. They're dead. Look at this thing. All right? I'm out of here after this. All right, I'm on the 4-hour chart. Hang on. Let me put this on the daily chart. I want to show you something. This is what I was talking about in the trade group. And I wish I would have started this trade group sooner, because everybody would have been in on this. I just started that trade group, and I don't like talking about these like little micro cap, like altcoin, whatever, and pumping people up. And I don't want anybody getting stuck with bags. None of that. But look, we're 3 days. In 3 days, this thing went up 400% in 3 days. You think all of a sudden the technology is just great, the fundamentals just lined up? This is where I sold at. We were laughing about it. I said, this is full on parabolic. I'm selling out of this thing. And I'm not even selling part of it. I sold part on the way up. I sold it all right here. That's where I sold at. And you know why I did that? It's full on parabolic. And it was funny too, because one of the guys in the group goes, he posts up the chart just like this and showed it to me and goes, yeah, that looks sustainable. And we had a good laugh about it. And you know what happened? Right afterwards, literally right after we were laughing about it, this wick came straight back down here, okay? And anybody that bought in anytime here got wrecked. And this is exactly what I'm talking about. If you bought where I sold, all right? If you bought where I sold, you immediately lost 50% of your investment. Or I shouldn't even say investment. You lost 50% of your lottery ticket, okay? So now next time you go to buy a lottery ticket, you can only buy half as many. So before you got to get 100 lottery tickets and you had a 1 in a million chance of winning, this time you're only going to get 50 lottery tickets and you're still going to have 1 in a million chance of winning. So better just make sure you don't buy them, by the top, because you're not going to get any lottery tickets, and then eventually you don't get to play anymore. And that's it. Look, we came down here, sold off methodically. I took actually one more buy into this because I said we went up so violently right there. We're going to come back down violently and we're going to attempt again. I didn't know if we were going to get rejected here. I didn't know where we're going to come exactly to, because, things jump. But look, this is from when it got listed on the exchange. Anybody that bought into this thing on either this wick or this right here got dumped and was wrecked for years. And then finally, this is what you want to buy on. This is what you want to buy into. This right here. That looks good. That's the car right there. Okay, that's the car we were talking about. It used to be a $50,000 car, and now it's used. Okay. But then what happened? They put rims on it. Now it's got rims on it, and now it's up here again. It's worth $100,000. No, man, it's worth the same amount. Just somebody's rushing out because somebody said you're not gonna be able to get this car anymore. It's limited edition. They're going out of style, or whatever it is, whatever the reason is that creates that false demand for it. That's what it is. So there you have it, guys. I'm telling you, we got to be so careful right now because there's so much risk in these markets. And even if I'm wrong. The worst case scenario is we lost out on the little gains. And what do? That's okay. We can lose the little gains. Our priority is not making little gains and little wins. Our priority, or little gains and little losses. Our priority is to make the big wins over time. And in order to make those big wins, we need everything to line up. We need all the confluence. We need everything. And if there's one thing that I break down my whole strategy by, if somebody says, what do you use to trade by? I say, I use Fibonacci retracements, Fibonacci horizontal supports, and moving averages. Okay? And what is that? What's a Fibonacci support? You know, or a Fibonacci horizontal, whatever. What is that? It's resistance. It's resistance and support. Okay? And I never buy at resistance, and I never sell at support. I'm not going to sell at the support area down here at the 200 moving average. I'm not going to sell the 200 moving average. I'm going to buy it because that's support. And then if it breaks, I'll be wrong, and I can get stopped out of the trade. And it's the same way at the top of the trend, okay? I'm not going to buy into the top of the trend and be the guy that gets, oh, we're going, and then wrecked. No, not going to happen. And I'm not going to let it happen to anybody in my community either. So if you really are thinking about buying up here at the top, you might as well just take me off, because you're not going to last in this space. You're not going to last in trading. You're not going to last in investing. And you're definitely not going to like being around me, because for the next, whatever, till you finally unsubscribe and go away, you're going to be like, man, I should have listened to him. So you can listen to me now, but it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But the most important thing, the fundamentals and the technicals are diverging right now. Let's look at Tesla. What's going on with Tesla, man? I've been at a Tesla. I'm done. I got out of Tesla. I'm not messing with this. I'm not playing this game anymore. You think all of a sudden Tesla's just worth all this extra money? Man, get out of here. People are just long and the strongest because it's pumping. Everybody's just getting in on the same asset because it's pumping. You know what I mean? You don't want to be part of that. You want to get wrecked because you bought the last time. Look at this divergence starting to build right now. And let's talk about this. Put in the high right here. We're selling back off down here. Okay, back below it. Flip the moving average back over red. We're able to get the histograms back up here. And now what's going to happen? We're going to get rejected right here. We're going to get rejected and sell back off. Roll back over. And then what's going to happen? We're going to have this high right here. We're going to have a higher high on the price action because this is going to keep going up until we get rejected. And then we're going to have a massive divergence because it took a ton of energy to get to right here. And then it's going to take barely any energy at all. It can't even get above the slope moving average. And it's going to be even higher. So is Tesla going to make new highs? Yep. It's going to go higher for sure. I'm very confident saying it's going to go higher for sure. But after that, Wreck City. And what's the most reliable? What's the most reliable? We got the red, hard sell. And what's the least reliable? That buy randomly out of nowhere with no buddies around. So are we about to get the buy at the top of the trend? That's what it looks like. And what is causing this pump right here? What caused that? Tesla was like upgraded to even. It was not considered to be, taking losses like it has been its whole entire existence prior to it. It's considered to be like an even. It's potentially like a neutral stock for somebody to buy or a neutral company for somebody to buy. That's what this is on, man. That's on speculation that all of a sudden it's not as bad. It's not any better. It's just not as bad as people thought. You know what I'm saying? So imagine your neighbor moves in and somebody's like, oh, that guy's a murderer, man. Don't go near him. And he's like, man, I'm not going near that guy. He's a murderer. And then one day he's out there, mowing your lawn. He comes over and talks to you. He goes, man, what's up? Cut up a little bit. And he says, yeah, man, I just got out of jail. I made some mistakes in my life and whatever. And you're like, well, what'd you do, man? Because, I heard some stuff. And he tells you, well, I left work and had a couple drinks, man, and got into an accident and got a DUI. And, I didn't have a good lawyer or whatever. Went to jail and had to serve 9 months because it was my second DUI. And you go, wow, that's terrible, man. I'm sorry to hear that. That sucks. But what just happened? So now he's still a bad guy. He got a DUI. He just got out of jail. But he's not as bad as I thought. I thought he was a murderer. That's not so bad. That's not so bad. That's what it is. That's what all this is. That's what all this speculation is. That's what all these buys are and everything. That's what the economy is right now. That's what these unemployment numbers are right now. We have consistently had like 1 million new unemployed job claims in the United States for like 21 weeks straight. And every week they say, oh, well, we thought it was going to be, 1,000,001. And they say, well, they projected 1,000,001 jobs lost, but we only lost 1 million. That's not so bad, man. That neighbor, he's not so bad, man. He's all right. You don't just go out there and like, that guy's your best friend now just because he's not so bad. You don't just trust him with everything because he's not so bad. You don't want to just like, invest in like his future because he's not as bad as what you thought. No, you just look at him a little better. You think, okay, that guy's all right, man. Everybody makes mistakes. That's what all this mentality is. It's the not so bad mentality. And if you think that this printing of money is going to cause all this stuff to just go to new highs and all of a sudden everything's going to be good, this is my last point and then I'm out of here because this is a really long video and I'm just rambling, I feel like. But this is important. You have to be very careful with how all this stuff plays out right now. Because everybody is so convinced right now that they're going to print so much money that it devalues the currency that what happened in Venezuela is going to happen. You're going to have a wheelbarrow full of money to go buy a loaf of bread. Well, this is a debt society, okay? And all these people are massively in debt. All these people got credit cards and they got houses that they don't own yet. They still owe more than the house is worth. And they got cars that, and insurance on the car and it's brand new and they were just making the minimum payments on their credit cards and they're paying their car payment and they're paying their house payment and they're just getting by. All of a sudden, we're going to have like a tightening of the credit, okay? All of a sudden, people's credit card limits are going to drop down. And what they had only a little bit of a balance open, they're going to have no balance open, okay? And then all of a sudden, you're going to have, you go to try to get a car now, and all of a sudden now they want 20% down. Now they want, extra payments. So you get an interest rate super low right now, but they don't want to loan it to you. They want to loan it to people like me. They're sending me offers in the mail like crazy, but I don't want their money. That's exactly what it is. They're trying to give away their money right now because it's the lowest interest rates ever. They're trying to loan it out because they need to make money. All these banks trying to make money. Who are they trying to give it to? They're not trying to give it to regular people who need it. They're trying to give it to the people who don't want it. They don't need it. And then when it dumps, when it all goes down, when it crumbles down, everybody capitulates out of these assets. All these Robinhood traders, all these people that need to leave the stock market because it's too much and they're getting ready to retire and they're getting older and it's getting too risky and it keeps dumping and they don't know what to do. It's just not worth it anymore because it's aging population. We will never get back to where we were if we don't handle this correctly. We're going to end up just like Japan in a stagflation, stagnating economy. And it's not just the actual economy and business and jobs. It's innovation stagnates. It's relationships. It's religion. It's society as a whole. Just kind of goes blah. Because nobody can get ahead. Nobody's excited. Nobody's pumped. They're not thinking up new ideas. Because their resources are being used constantly, wondering, worrying how they're going to get their next meal, how they're going to get a job, how they're going to get by for another week, how they're going to get their hospital bill taken care of. Okay, you don't have time to invent new things and get excited and create stuff when you're too busy just worrying about getting by. And that's what we have to worry about in this economy right now. And the final catalyst, the thing that you're going to come back and say, this dude called the absolute top of the stock market last year, and I see it. It's all there for everybody to see. A couple months. I started this channel on mid-August last year, and the stock market crashed a couple months later. And in those couple months, I made a video before anybody ever heard about CV and all that stuff, before anybody was even talking about that stuff. And I was looking at it when it was in December and January. I was already watching it, okay? Because I have connections with Asia and whatnot, and I already knew about some of the stuff, and I knew what was happening, and things were getting weird, and it was getting crazy, and I was watching what was happening on these like super obscure like TV stations or these random situations, and I was watching what was happening with like various leading indicators, the yield curve inversion, all this different stuff, bonds. I mean, none of it makes sense, and they're all leading indicators, and everybody was so pumped and we're going to new highs and everything. That is the divergence in the market and reality, and that is what's happening right now, and everybody is saying it. Everyone is saying it, but no one's paying attention. They see it happening, but they're not preparing for it. The divergence right now is everybody says this doesn't make any sense. Everything is pumping. Why is it pumping? It shouldn't be pumping. It should be dumping. Why is everything going up right now? That's the divergence between reality and the economy. Okay? And that is exactly what gets people in trouble. And then afterwards they say, man, I saw it coming. I saw the divergence, but I didn't listen to it. I don't know why. But everybody sees it right now. Everybody's talking about it. And they just say, oh, it's because they're printing all this money. They're printing all this money. I'm telling you right now, the GDP is only down by like 500 billion or something like that in the United States right now. It's only down by a few percent. It was like 7% for the quarter. So the projected GDP for the year, 8% or something like that, the projected GDP down was like 30-something%. By the end of the year, if it continues how it's going, the U.S. economy's GDP would be down by 30%. In the meantime, they printed $7 trillion, and the economy is still horrible. So how much are they going to have to print to make up that amount? If the economy is still this bad and they printed $7 trillion, they're going to have to print like $20 trillion more to get us back to where we were, to make up the difference. Okay? They're going to have to print $50 trillion. So if you think this is the hyperinflation taking place and that's what's going on right now, I'm telling you right now, you're dead wrong. This is FOMO taking place right now. The hyperinflation doesn't happen until later. Because if all of a sudden we hyperinflate the dollar and everybody just has $100,000 and they pay off all their credit cards and pay off all their cars and everybody's just living the good life and all of a sudden it's like, oh, who cares about the economy? They're just printing it out, giving it out so fast. We're buying up everything. That's great for regular people that get the money and the buyout and get out of debt and get a new car and get everything, but it devalues the dollar. So who does that hurt? It hurts the people with the assets. So who has the assets? All the rich people, the 1%, the powerful. So if you think for 1 second the people on top with all the money are going to devalue all of their stuff so that regular people can be better and they can fix the economy and everything can be better, you don't know anything about economics. You don't know anything about business. It's the absolute opposite. Those people will do whatever they have to do to crash the economy so that they can buy in lower. They want not only their stuff, they want all your stuff too. And they don't want it at what it's worth. They want it at a fraction of what it's worth. And that is why it's going to crash. And the final catalyst is going to be this, and I'm out of here. The final catalyst is going to be capital gains tax. Okay? Right now in the United States, on average, you're paying between 33 and like 75% in capital gains tax, depending on your bracket. But even if you're paying, let's say 50%, when the stock market crashed 50%, people weren't expecting that to happen. So once it goes down 10%, 20%, 30%, 40%, 50%, it doesn't make sense for people to sell. Smart people are not going to sell. Why would you sell? You're going to take a hit of 50% and then you're going to pay 50% in taxes. So you're going to end up with a quarter of your money. You had $100,000 in the stock market and you're going to pull it out and you're going to end up with $25,000? I don't think so, dude. Not going to happen. So what do? They fix it, quote unquote. They pump it back up all the way back to the top, maybe even a little bit higher. And then what do? The biggest exit scam of all time. And what is that going to be? Right before Donald Trump goes back up for election. And this is not against him or for him in either way. It just so happens that's where the timeline is going to come in. Donald Trump is either going to do a a capital gains tax break. Not just a holiday like you pay it back at the end of the year. I'm talking about they're going to do like $2 million or $5 million or whatever amount of money, a one-time only exit scam where you're allowed to take that money out of the stock market and not pay taxes on it. One time they're going to do that. Or you could take it out of whatever assets, you know what I mean, but not pay capital gains tax. And that is going to be the catalyst that crashes everything. You heard it here first. I'm telling you right now, because otherwise, there's no way to get this money out of the system. And if they just keep hyperinflating everything, you know what I mean? That helps everyone. And that's not how the game works. The game is not, let's have everyone be prosperous. Okay? Because look at what's going on now. Look at what year it is. Look at the civilization. Look at us as humanity right now. Does everybody look super prosperous? Or does it seem like the Jeff Bezoses of the world are getting more and more prosperous while everybody else is getting less and less? Everybody else is getting worse and worse off, okay? but the big dogs are getting better and better off. They made trillions of dollars, hundreds of billions of dollars through this crash, through Amazon and through Facebook and through, Elon Musk, through Tesla, and all these different, rich people are crushing it right now. But how do you think average Joe's doing? How do you think your neighbor's doing? How are you doing? Are you doing way better now? Or are you just like glad that you got a little something from the government to make up for the damage that was done? But in the end, it's not going to go back to normal. You're not going to go back to the job you had before. There's going to be, with this many people unemployed, you go back to get a job, and you're going to be going up against, before you were going up against 2 people to get that job, now you're going to be going up against 5 people to get that job. And you know what that means? I know how that works. Supply and demand. So if you have an oversupply of labor and a lack of demand, so you have a bunch of people trying to compete for the same job, you have a supply of people and you have a demand lack of, because you have more of those people trying for the same job, you get to pick the best candidate you want as a business owner. You get to pick the best guy, and you get to pay him less than he was ever worked before, or she, because you have 4 other people that would gladly take that job for less money if it means the difference between getting it or not. Okay, so everything's going to end up, necessities are going to cost more money, jobs are going to pay less money, they're going to be harder to get, you're going to get less rights, you're going to get treated worse, because you're going to be so grateful that you even have a job that you're willing to do anything to keep it just so you can get by. And then what's going to end up happening? Regardless, it's universal basic income. We're going to end up on universal basic income before long. They're already doing it. 50% of the United States right now, 50% of the money coming into people's pockets is from the government giving them money just to get by. 50%. And right now, statistically, 75% of people in the United States are getting government aid. 75%. So I'm not getting government aid. So that means if you take 4 people, you take me and 3 other people, and you put us in a room together, the likelihood is that those other 3 people are all getting money from the government right now just to get by. And I have nothing wrong with that. You getting money or somebody else getting money to get by does not take a single dime out of my pocket. It does not hurt me, not one bit. It's the opposite. If everybody is prosperous, we all are prosperous more together. But if you have somebody like Jeff Bezos and you have somebody like Elon Musk, who is a concentration of prosperity, that is worse for everybody as a whole, because in order for them to gain $1 million, 1 million other people have to lose $1. So one person gets better off and 1 million people get worse off. And I'm going to leave you with that. I really want you to think about this and think about how it's going to potentially play out, and really just brainstorm it and think about what is a realistic aspect of where this economy, where this world is going to be a year from now. Is it going to be better, or is it going to be worse in 6 months? Okay, it might be better in some ways, but overall it's going to be worse. And this stuff doesn't just go away overnight. It takes years to recover from, and the longer it takes to recover, the worse it gets. So the best thing they could do, everybody says they're going to ruin everything, printing all these trillions of dollars. Oh, everybody's going to have to pay for it. Your kid's going to have to pay for it. Your kids ain't going to have trillions of dollars. They're not going to be able to pay $1 trillion debt. So what are you worried about? People say, oh man, they're going to print all this money and all my assets go down. Well, if you get some of that money, you're going to be fine, okay? Trust me. You're not the guy who's going to lose assets if they print too much money. No offense, okay? If anything, you're going to gain assets because you're going to take your little stimulus check, or you're going to take your gains from your business because everybody else has more money and they're buying more stuff from your business, so you're more prosperous. You're going to take that, you're going to do something smart with it. You're going to invest it, and all of a sudden you're going to have more gold. You're going to have more crypto. You're going to have whatever it is, a better online company. You're going to have whatever it is that you're doing, you're going to be better off for it in the short term. And you're not going to be the one paying it down in the future. And the truth is, over time, fiat money always fails. It always fails. Roman Empire. Empires crash down and fail. The dollar is going to fail eventually. But it's not going to happen overnight. We might transition to a non-dollar based system in the next couple of years. We might transition away from the world reserve currency in the next few years. But I'm telling you right now, it's not just going to happen overnight. It's going to happen in the dark, when nobody's looking, when everybody forgot about what was going on and all they were doing is just worrying about getting by. That's when all this stuff bottoms, and that is when you should be buying. Not at the absolute top, when it's pumped up, when you have this thing staring you in the face, when all you do is look next to it and see, what was the last time that happened? Dump. What's going to happen? Maybe I'm wrong. You know what I mean? Maybe I'm wrong. But after this happens, And I'm going to leave you with that. Crypto trend trader. And I'm out. Hey, and I'm sorry if I lectured you. I didn't mean to tell you, but I'm trying to save you folks. I'm trying to save my people. I care about you guys. Crypto trend trader. And I'm out of here.